support at 32, 21, 11, 44 even, and 92. Resistance on the upside at 52, 64, 69, 76, and 83. Pivot 44, resistance 52, 64, 69, 76, and 83. Support on the downside at 32, 21, 11, 44 even, and 92. All right, market here kind of broke on the news of the retail sales number, which was kind of a little better than expected. And you see a bond market here rallied. Inverse relationship between bonds and equities. I don't know. Is that still happening? I don't know. Well, anyway, that's what's happening. That's what happened here. An 8730 number come out. The better than expected. I don't know. I don't know why it rallied in the bond market. Anyway, but we don't care why. We just need opportunities to trade. The market slowly upticks here. Got resistance at the 52 area. And then welcome some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on levels that we gave out and also price action opportunities that occur. The combination of both those gives us our opportunities to scalp, usually about, depending on volatility, but well, today about, I think, 3 or 4 points per trade. And that's what we're looking at as far as targets are concerned. We don't believe markets go straight up or straight down. Consequently, we're looking for those inflection points that create opportunities for us to scalp the market or take some opportunities to make a little bit of money every day here, depending on volatility, of course. Volatility is always the key here to adjusting your stops and profit targets, as that's always the case with when you are looking at these markets on an everyday basis. You have to take into account the volatility that's involved in any given day, because every day is different. All right, so let's see if we have any numbers coming out the rest of the day. We did, like I said, had retail sales come out this morning. It was a little better than expected. I don't know, does it help or hurt bonds? I don't know. You can see here by the rally, it rallied the S&Ps. I mean, rallied the bond market a little bit. And S&Ps broke. Don't ask me how, why, what. I don't know. I just trade this stuff. I don't really look to try to understand why it does the things that it does. As soon as you try to figure that out, it'll change. So just trade whatever is in front of us every day, and then look for opportunities every day. So again, we are trading mini S&Ps, looking for opportunities to scalp using the levels that we gave out. And we'll repeat the levels again. Our pivot this morning is 44, resistance at 52, 64, 69, 76, 83. Support at 32, 21, 11, 44 even, and 92. All right. So let's see here. Let's see, 10 o'clock, 9 o'clock, top of the hour. We've got business inventories and National Association of Home Builders Housing Market Index and Atlanta Fed Inflation Expectation Index. So a couple numbers could affect the market this morning. As if you look at the chat box area there, you'll see the levels that we gave out. Those are the levels that we're going to use as a guide to the day. And we can add to them, we can subtract from them, we can tweak them a little bit, all based on the volume and also the volatility on any given day. So that can change. Nothing here is etched in stone, as I've said that many a time. As the market here comes up and tests the 52 area. All right, very nice rotation there against our 52 area. Got right up to 52. Again, I don't know if you got filled on 52 or not, but hopefully you were scaling in around the 52 area. Again, depending on how many contracts you trade, it also depends on how you scale in. But it did get right up to 52. You can see our blue band there was a 51 and a quarter. Maybe you guys got in there just a little bit before to take advantage of the blue band as well. Hopefully we're able to take advantage of that level that we had there on the first resistance area, and a nice little rotation off of it. So nice little trade to begin the day. Again, that was our first resistance area, and those of you who might have just jumped in a little bit late, if you look at the chat box area, you'll see those levels that we gave out this morning as a guide to the day. We also focus more on the morning hours. It helps us with the dynamics of the trade, the volatility, the volume that's being traded during those hours helps with the inflection points that we are focused in on. I think that those, for whatever reason, there's more opportunity in the morning hours than there are in the afternoon, as the afternoon trade gets a little bit more one way and choppy, and if it's range bound, it gets even worse. So again, so you have, to keep that in mind if you're trading. As we coming off here, the out of 52, because we got up to 52, and let's say maybe you didn't get filled at 52, but the level already worked for us, so we're not going to look at the 52 area. If you didn't get filled up there, you'd have to maybe cancel anything above it on your top end of the scale, and then see what happens from there. So but the 52 worked, and it was doable. We don't take the secondary level after we hit it the first time. We're not trying to use it again. And that's why sometimes in the afternoon trade, especially if it's range bound and it's between levels and it's not really doing anything, that's hard for us to get involved. And it requires a lot of patience there in regards to waiting for opportunities to trade. The nice rotation there against our 52 area. Again, you had a couple of reasons to trade that. We like to layer in reasons to trade. Multiple reasons give you a little bit more confidence in entering your trade. At least we try to give you the confidence in entering your trades. That way you feel good about the opportunity that's in front of you. And then as long as your stops are in place, you just take the trade. That's what we're trying to do here, is to give you confidence in your ability to find trades. And then once you find them, reasons why are behind them, and we explain the reasons behind them, and then you execute those trades accordingly. That's what we do in our education course here. If anybody's interested in that, we offer our education course in addition to this trading room that we have every day. And the goal of our education course is for you to be able to find these levels on your own, know how to enter them, understand why they're there, why we would use them, and then according to your risk tolerance, find the right amount of contracts to trade, the right amount of entry points, how you would enter each trade. Those are all part of knowing you as an individual trader, and then maximizing profits according to your risk tolerance. All right, so we have a few numbers coming out here at 9 o'clock. Business inventories, National Association of Home Builders, Home Housing Index, and Atlanta Fed inflation expectation. All of those could, in their own little way, move the market. Since there's a bunch of them, we'll see what happens. All right, so we're just kind of hanging here on the lows against our first level resistance that worked very nicely. Support level on the downside would be at the 32 area. Let's see what it wants to do down there if it gets down there. Let's see, when markets laser focused on the situation in the Ukraine this week, investors seem to shrug off the latest figures of red hot inflation. Stocks powered higher yesterday despite a PPI that showed U.S. wholesale prices in January soaring to 9.7% from a year ago, following more than twice the analyst estimates, and just short of the largest jump on record seen in May of 2021. A slew of more important data is on tap today, like retail sales, which already came out, industrial production, which already came out, housing market index, and later on this afternoon at 1 o'clock Chicago time, the FOMC minutes are going to be released. That's always fun, which could shed further light on how price pressures are impacting the economy. So I forgot to mention that earlier. At 1 o'clock. Well, like I said, we don't like to trade here in the afternoon. So hopefully by then you'll be long gone. If you are watching the trade, that's fine. The trade gets very volatile. It's kind of quasi F day, F standing for Fed or something else. So we try to stay away from those Fed days. As we've come down here to our pivot area, kind of hanging around there, see what it wants to do. The latest inflation data continues to disseminate that inflation is purely transitory theory. It's knocking apart that theory is what it is. Disseminate the inflation is purely transitory theory. Really? I think we've gone past that already. After pricing in less than one Fed hike as of last September, markets and the Fed watchers now expect 6 to 7 hikes over the next year, with some arguing for a 50 basis points move, not just 25. Besides causing a stir in the Federal Reserve, Congress is starting to prepare for some action on the fiscal side, though things are getting partisan ahead of midterm election campaigns. Democrats have introduced legislation which would suspend the federal 18-cent per gallon gas tax until next year, and considering pulling some pieces out of the stalled Build Back Better agenda to address prescription drug prices, childcare costs. However, Republicans are quick to criticize the gas tax holiday, saying the Republicans now realize that they were on the wrong side of the energy issue, as well as dumping trillions of dollars in the left-wing spending on recovery economics that already had the preconditions for some inflation. We do have a number coming out here in about 16 minutes. Market is just kind of hanging around our pivot area here, so kind of quiet. It was nice enough that it did go up there to our first resistance area and gave us an opportunity to make a little bit of money. I mean, that's a perfect way of also taking a little bit more, 2 or 3 points on the trade if you have multiple contracts on, or even if you have one contract on, you can just you could have a trailing stop. Obviously, it all depends on your risk tolerance and what your goals are and what you're trying to accomplish. And everybody here has different goals and ideas of what they're trying to get out of any individual trade. So not everybody here trades the same way. But when you hit the level perfectly and you take no risk and you want to have a trailing stop, you can probably take a little bit more than 3 or 4 points on these trades sometimes. And this was a perfect example of that in this first little trade here. And again, everybody trades differently. There's not one way of doing this the right way. Everybody does it their own way. And as long as we find a way to make you a little bit of money, that's the only thing that matters. Again, the goal of our education course is to be able for you to become an independent trader, find these areas on your own, to understand why they would work, how to get into them, and maximize profits. All right, we're just kind of hanging around our pivot here. We have a number coming out here momentarily, so we'll see what that does to us. All right. Just again, remember that the 52 already got triggered, so we're not going to be using at that level. And now we're just coming back up here, and we're looking at next level on the upside is up to 64. Hey Don, I got something for you. Shares of Virgin Galactica shot to the stratosphere on Tuesday, with the stock going up 32% to end the session at $10.74. Catalyst was the opening of ticket sales to the general public for the first time, which moves the company closer to space flight commercialization. The first 1,000 customers on board at the start of the commercial service later this year, which he called an incredible, strong foundation. That's what the CEO plans to do as the company begins regular operations and scales its fleet. Spaceflight reservations will command a price tag of $450,000. With the initial deposit of $150,000, customers will make their first final payment before their flight. There you go. They can have your seat. Come on. $450,000 customers. I guess. I don't know. Seems a little pricey to me. But then again, Who else is doing it, right? Funny. All right, we are range bound here. Kind of going nowhere fast. We have a number going to be released in 10 minutes here. So we'll see a few numbers, 3 numbers going to be released here at top of the hour here in about 10 minutes. So we'll see what goes there, and see if it gets us out of this little range. Support on the downside we have is down at 32. And then again, FOMC at 1 o'clock. We do have Fed speak at 10. So a couple things, number here is a 9, Fed speak at 10, FOMC at 1. Minutes, FOMC minutes, I should say, minutes. So that's on the slate. Oh, quickly rotating down here. I guess they hit some stops really quickly, coming right down to our 32 area. Again, that's when you have to have your orders in place here, take advantage of these kind of moves when they occur, because we just never know when they're going to happen. All right, nice little rotation there against our 32 area. Got quickly down to 32 and a quarter. Again, that's why you got to have your orders kind of in the queue to take advantage of this quick rotation down here. And again, they just happen just like that. All right, nice little trade there for those of you who were able to jump in. Again, if you missed it, well, I guess you could have gotten in a little bit, I guess you could have gotten into the 33 area instead. But it was a nice little quick rotation there. And now we're coming back down here again. Again, once we use the level, we're not taking it again. Keep that in mind. All right, if you did adjust your entry point there, maybe you got in a little bit better on the lower end. If you did that, you got a nice little quick rotation off of that. Again, everybody trades a little bit different. And there's a nice little area there for us to try to take advantage of that little rotation against our 32 area. Again, like I said, it's probably the only way you have to have your orders in place, your scales in place there to be able to get filled. And then even they did come back down and retested. Hopefully, maybe if you'd made adjustments a little bit lower on the lower end, maybe you were able to take advantage of it. Second time, again, the difference this time than the first time is that it's on the same bar, and also you made the adjustment to the better entry point. The next support level we have is down at the 21 area now. If you look at the chat box area, you will find the levels that we gave out this morning, both the support areas and resistance areas. If you just click on the chat, you'll see those levels that we gave out, and we use those as a guide to the day. Well, you got that done, so nice trade. All right, next support level is down at 21. We do have a couple numbers coming out here in about 4 minutes. So for those of you who are, we don't like to trade when fundamental numbers are released. So we try to stay away from the market. Again, it all depends on your risk tolerance. I know some traders love to trade at those levels when numbers are out. I just don't. Doesn't mean you have to, but I just don't like to trade them. All right. So we have next support level on the downside is down at 21. Marking here on the lows. The next support level is down at 21. So we'll see what happens here with the release of these numbers, which are going to be released in about 2 minutes. All right, we've got a number coming out here in about a minute or so keep that in mind. Again, we'd like to be flat when those numbers are released, and we have a slew of them this morning, so who knows how it's going to affect the market, if they're going to cancel each other out or not. But again, it's not for us to try to determine. Let the market kind of determine it for us, and we'll just trade whatever opportunities there are in there. Right now, support down at 21. And if you're a little aggressive, resistance would be around the our pivot area there at 44. But I'm really going to be touching it here around when this number is going to be released. Oh, numbers out. I always love that little jolt one way or the other once a number is released. And then the rotation back. Always hard to trade these numbers because it is action right here. Never know what they're going to do with it. Because some people that's a sell, then the buyers come in. Oh wait, it's a buy. And wait, it's a sell. No, it's a So let them do their thing, and then we'll take advantage of it afterwards. To be honest with you, very hard. You'd be guessing here if you just jumped in at any price. That's what my thought is. So let's just be patient and see what happens. Drifting up here a little bit. Getting choppy here. Not surprising. Again, we see so resistance around 44. Support next support level is down to 21, and right here in the middle, we got to just let it do its thing. Yeah, that's if you're aggressive at 44. Let's put it that way. All right, just kind of staying at here down at these lows or candle lows. See what it wants to do. Yeah, they're not letting you stay long or short. It's hard to stay one or the other. It's just, it is what it is. That's why it's tough to, when you're trading these numbers, if you're trading these numbers, to get any kind of traction in them. All right, we're just chopping around here a little bit. Patience is important. We always talk about that. All right. Again, if anybody has any questions, it's a good time to ask when things are slowed down a little bit. Always a good time to ask questions. Again, we have to wait for opportunities. We're not out there to just trade for trading's sake. We're waiting for opportunities that the market will give us, and then take advantage of it when they present themselves. We're just chopping around here a little bit. All right, just chop, chop, chop. Let's be patient. Again, if anybody has any questions, good time to ask. And chat box area, if you ask any questions you might have. And if you look at the chat box, maybe we can re-enter the levels for us. See the levels that we're going to use as a guide to the day. There they are. Thank you, Don. There are the levels. And we're getting this is like the no trade zone that I like to call. And once we got our levels, got triggered very nicely there, as you can see. Yeah, first level, second level on the downside. Don has every well, let's step back for a second. Everybody has their different ways of getting in and out of trades, right? And also how many trades you're going to make. There are plenty of opportunities depending on, what kind of risk tolerance one individual wants to take as far as how many trades you're going to make and so on and so forth. So Don has got a lot of he likes to trade a little bit more than what I like to do. I like to rather wait for opportunities to present themselves and then take. He's got other opportunities. He sees a lot more trades that are in the queue there for him. I mean, we do have a lot of price action opportunities that are occurring that I don't talk about as far as what we teach in our education course and what you can get out of some of the other opportunities that are present or tradable. So I try to use the levels. I try to talk about some price action opportunities that are out there, but I try to keep it straightforward to the levels and go with that. I do mention some price action opportunities that occur every now and then, which are fine. But again, everybody's got their own different way of trading, and you have to find the niche that you are comfortable doing. And look, and I was trading. I stood around a lot of traders. Some of them were really great traders, and I could never do some of the things that they do. So everybody has their own way of entering trades, exiting trades, finding trades, and so you definitely have to find the niche that works for you and then try to take advantage of it when those trades present themselves. And what we try to do in our education course is show you all the different opportunities that are out there. And then you have to make the determination on your own as to which trades you see, recognize, and then then the execution part is on the second part of it. So there's definitely the different styles, like you put it. Not to say that one style is right over the other. It just means that you have to find a style that works for you and that you can capitalize and be profitable on. Hope that makes sense. JP Morgan is the first bank to enter metaverse. So I guess you should be buying property in metaverse, I guess. Because you never know what that property could be worth at some point or another, because you never know who's going to be your neighbor, right? I think that's the gist behind it. Uh, I mean, okay, a little bit too way out there for me, if you ask me. You take care there, Leo. Open up a trading room in the metaverse. Great. Don't give Brad any ideas, okay? Seriously, let's not get crazy here. Is Don one of the instructors for our course? He could be. He's taken our course, and but I uh, definitely do most of the instructions. But I mean, look, if you are a part of our course and part of what we're trying to teach here, if you want to talk to Don, I'm sure he'd have no problem talking to you and telling you the insights that he sees and some of the things that he's looking at. All right, we're coming back down here to the lows. We have our next support level is down at the 21 area. All right, again, we're on the lows here. We're looking at the 21. All right, guys, so there's a little bit of a little area down there that we're bouncing around in. Well, it's a matter of, again, it's a different perspective of how to trade, and I think that he maybe Don also looks at is giving you definitely gets into the market a little bit more than I do, and definitely no, I understand, and he definitely kind of I think people. I'm more in the area of trying to let you become an independent trader, kind of make those decisions on your own, figure out what you're trying to do. And when Don gets on, I've heard him. He likes to hold hands and kind of walk you through trades, and I get that, and I see the difference. There's definitely a difference, and definitely in how he presents it and how I present it. So you are a very wanted individual there, Don. Yeah. All right. We are just kind of waffling around here a little bit in this little lower range, which is fine. We got to, kind of hang loose with this and wait. Are there trades in there? Sure, there are. It all depends on what your risk tolerances are. I mean, definitely there's a range trade there. It's happening, the reoccurring. It gets into a little bit of a range. It kind of stays in that range. And then you have to decide whether you want to take those opportunities or not. So the market is giving us a little chance. Again, it all depends on your risk tolerance versus anybody else's.
Hey, a couple quick programming notes. Sol has a great discount on its services. Usually it's $3.99 a month. Right now it's on for $150. For those that haven't converted over from guest to friends and family, which is this offer, I'll send it out to you now. We had to exit a couple people this morning that hadn't rolled over from guest to paid. So if you want to stick around, make sure that you stick around. And if you get this discount, then that's great. If not, we do have individuals who just want to pay the $3.99 rate. If you're one of those, make sure you raise your hand. I would also mention quickly for those that are interested in being taught by Sol, Sol takes you into private session in a private Zoom room, and he teaches you his methodology. He teaches you how to set his proprietary scalping levels. And then he brings you in here as a proving ground and an access point to him as you're applying your newfound trading skills. There's a lot that goes on here, both publicly and privately, as you develop that relationship with Sol. So I just sent that out to everybody. We got a few people to exit. Take a moment now in time. Click on the link, get yourself set up, and then stick around. Carl, let me know what you're doing. Walter, Tim, Susan, Ron, I think you are part of Sol's friends and family. Just let me know. Hey, Kent, Sol is setting up in February for some of his students. If you'd like to be part of it, let us know. I know it's on your bucket list and you want to get it done soon. Just give us a quick shout out and let us know what your status is. Bernard, you're part of Sol's friends and family, right? If I don't hear from people, I just exit you. I don't want to do that. Give you a couple shots, but generally, we're looking for full participation here. Hey, Frank, how are you? Glenn? Hey, Roop? Zahurl? Anupam? Dean? Edward? How are you doing? Nice to see you, Frank. A nice group of people in here. The goal here is 2, 3, 4, 5 trades. If you have a trading methodology, it's great. If you need one, let us know, and you can be taught it in Sol's mentoring and training. All right, I'll be in the background if you need me. And if you need, what I do is I review the individuals coming in based on the friends and family. I authorize you to roll over at the discounted rate. So, get it done. And you can see the link that I sent out. It's in the chat area. It's all self-explanatory. Appreciate it. Thank you.
All right, let's see, 20 trades, prove yourself statistics of your strategy, thus eliminating any emotional component from your game. Well, that's a good concept to have, and I think what basically it's saying is that if you, whatever methodology you have, that if you can feel comfortable trading it, whether it's be 20, 50, or 100, the reality of it doesn't really matter because you have to feel comfortable doing it. Now, are we going to get blown out of some of these opportunities? We will, because not everything is always the same, and the strategies always has to be adjusted. But you have to remember that because we're here every day, we have to tweak the rules based on the volatility, and that's a difference in with all these like set guidelines that people have sometimes, because we're here on an everyday basis. And what we try to do with the methodologies we have is obviously give you confidence in putting on your trades, which I think is what it's trying to say here by taking the emotional component from your game. You need to have the confidence to enter those trades, confidence to find them, understand why they would work. And if the more times you see them work, and then the more time you feel confident doing it. And that's what we're trying to instill here with the methodology. Once you start understanding the levels and why they're working and how they work and why we would use them, that gives you more confidence putting on those trades, even when the volatility gets pumped up and we start going crazy and the market's going nuts. And in those instances, we have to adjust also. You have to adjust your contracts that you trade. You have to adjust your entry points. You have to adjust how you. So even though I agree with that, and what we try to do with ourselves is try to make sure you have confidence in the levels, have understand the methodology, and then repeat, rinse and repeat basically over and over again. And as long as you feel comfortable making money, then that's great. The concept, the problem is that adjusting to volatility is what the problem is that most traders have. I think you have to understand when things get a little bit crazy, and then make those adjustments accordingly. And that's where the difference is, I think, between you have to understand when to pull it back, when not to trade so much, and so even though you could do the same thing every single time, blah blah blah, but if you don't make those adjustments to volatility, and especially these days, because this is what this market these days with electronic trading and with the where we're at as far as percentages are concerned, when you have a 1% move versus a 2% move, when you're up here at a 4,800 level, those numbers are big. Versus if you were trading at a 2,000, then a 1% move is only 20 S&P. You just do the math, right? So yeah, the volatility is there, and adjusting to the volatility is important. I agree that as long as what we're trying to do here is also give you confidence in finding those levels, finding the trades, understanding why they work, and then when you do have that confidence in doing it, then you just automatically believe in it. I mean, I think we can see, if you've been with us for a while, the levels and how they work, and as that's one aspect of the trades that we have. The second aspect that obviously is the price action trades that we have, and those are a little bit more riskier. Those take a little bit more, are not the level of confidence that you need in those trades, I guess, is that those will take a little bit more. That's if you're more of a trader who Those let's see, how should I put this? The strike rate for those being correct are a lot less than the levels. Let's put it that way. But that's not always necessarily the case. It also, you have to adjust those goals. Some of those goals are not trying to get 3 or 4 points out of those trades. Some of those goals you're only trying to get 2 points, maybe a point and a half out of those trades. So again, even though you're taking price action opportunities, they're also different in the sense that those goals are different as far as what your targets are concerned. So again, yeah, I like the concept that if you put on those trades and that's what we try to do here by when people come in here or have never been here before and you listen to the trades and you listen to the levels, hopefully you get confidence in what we do. And then, we try to make sure that you want to try to expand it or take your trading level to your trading opportunities to another level by finding where those numbers, those levels come from and why they would work, and then take our education course. So yeah, I agree with you. It does help. But again, I think the difference is the traders need to also adjust because it's not always black and white. And I think that's the difference between a lot of traders, at least traders these days, and that's where a lot of people don't make money, adjusting to volatility. All right, we had a nice little trade there as I was talking against the our blue band area there. Came right up to that 39 area. Hope that answered your question. Um, all right, so we had a nice rotation again. If you're looking for price action opportunities, you've seen how our blue band works. If you've been with us a while, when to use, when not to use it, those are all also part of our education course. It's not always the same in regards to the blue band being there and taking it every time. Again, Johnny, it depends on how many contracts you're trading and what your goals are, right? I mean, if you like the blue band, I know, and you can scale out depending on the number of contracts, you can scale out of one. You definitely take 2 or 3 points out of that, and then, if you like the position and you want to have a trailing stop, then whatever you got left over, you can take a little bit more out of it than 2 or 3 points. Again, it all depends on the individual and how they get in and out of those trades. Everybody trades differently. Some people will trade bigger size, trying to get for 2 points and be happy with it. Others are going to trade smaller size, trying to take a little bit more than 2 points. Others will take the big size, get out of most, and keep it a little bit. You got to find a niche that fits your personality and fits your confidence level, as somebody said before, to be able to get those trades in. Thanks, Don. All right, so we rotated off of our blue band there. I think if we get above the 44 and hold above 44, 45, I think we rally, go and retest that 52. Yesterday, if you were with us, we suggested that We had a little buying opportunity there. Again, the market set itself up for us to be able to have that buying opportunity. We talked about it during the trading day, and again, we had a nice little rotation to the upside once we got in and hit our levels above on the upside, a couple of them anyway, before it got into that goofy trading range it got into yesterday late afternoon. So again, but whatever, if we have any momentum trades, the market has to set itself up for us. We don't like to, just say that the market's going up or down and jump in. That's not how we trade. We try to wait for the market to set up those opportunities for us. All right, we're just kind of hanging up here, trying to see if we want to get above this. We gotta get above the 44 area. And then we'll see if we can rotate a little bit higher up. Excuse me. All right, we're just kind of hanging up here. Again, this is where our blue band area is. We have to get above the 44 and hold above the 44 for it to rotate to the upside. All right, that blue band is very stubborn. Again, if you were trading the blue band there, anything above, let's say 41, you want to be out of any shorts. Okay, so as you can see here, the blue band is doing its job really well. And this goes to the confidence question that was earlier asked about, how many times you take a trade. Now, today it's working great. Does it work out every time that the blue band bounces off the blue band, gets you 2 or 3 points? You could have done it today for, I don't know, 7, 8 points, 10 points. Again, depending if you're confident with it and you take it every time, you feel confident doing it, then it's great. And again, we show you a whole bunch of these kind of trades where you're finding opportunities to trade based on the technical analysis that we do, and then that way you are given you have to find those trades that you visualize, can understand why you would enter them, why you would use them, and then take advantage of them when they present themselves for you. So they're there. The trades are there. You just have to find them and get confidence in putting them on. All right, we are definitely wanting to uptick here a little bit, but seemed that again we got to get above 41 for it to rally. I think if you're using a 41 stop, you're getting paid off here very nicely. Again, sometimes even when it gets a little slow, there's some opportunities to trade. But again, you have to understand your risk tolerance in entering those trades, understand how many trades you want to put on, what your goals are, and all those things that come into play on an individualized basis. Yeah, the market is slow today. Had a little bit of action this morning, and then it just kind of that's it. All right, so we have a little bit of a buy here. Get above the 41, maybe rotation a little bit higher. At least should get up to 44, which is our pivot, but we'll see. But it is definitely range bound here. You just never know when they pull the volatility out of these markets, right? You just never know. If anybody has any questions, feel free to ask. We do like questions, as you can see. I have no problem answering any type of questions that you might have. All right. Again, just kind of having a little tough time getting above that blue band. If you are a blue bander, you are doing really good. We gave you an exit strategy there above 41. So it's not like you don't know where your out is. All right. Oh, man, did they pull the plug fast on this market today? Thought we were going to be a little bit busier. Again, if you're playing the range game, you have to find your exit strategies above and below the range. And that's how you can take advantage of the range game if it's there. Well, just never know there, Don. Just never know. All right, definitely things have slowed down here quite a bit. We are definitely range bound. That's what happens, you know. So we're also on the lows though, so got to be a little bit careful about that. Hey, 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 hey! Take it easy, you two. All right, there we go. Now we're starting to try to get up here above the 41. Trying. So we have FOMC minutes to be released at 1 o'clock Chicago time. And again, try to stay away from there if you can. They ran it up to 41 almost and came back down here a little bit. Almost couldn't get above it. There, we're just trying to get above the blue band hold and then see if we can get above the 41, and well, right now it'll be above 42. Get us above the 42, and then maybe it'll rotate to the upside. All right. Patience is very important, as you can see here, especially now that they sucked out some of the volatility and volume. So we have to be understanding of that and trade it accordingly. You can't just keep trading the same amount, especially when there's not much going on. VIX is up to 26 handle. That's not too bad. I think if it stays in this level, we would like it. I think just when it starts going crazy, it's harder to get any kind of position or